Hey everyone, welcome back to my channel. This is part 3 of my volume price analysis series. I've actually been very excited about getting into this portion of volume price analysis because in my opinion, this is one of the most powerful tools in a trader's arsenal and can fit into any trading style, whether it be long-term, short-term, scalping, etc. Before we get started, if you would like to get a 10% discount for Trade Addicts, don't forget to use my referral link in the description. Also, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. This is something I love doing, and we'll have plenty more coming in the near future. I'm almost done the volume price analysis series, but there's just so much more I want to cover. If you haven't already watched volume price analysis part 1 and 2, make sure you watch those either before this one or after, and it will definitely help fill in some blanks. And so that being said, let's get right into it. So the volume profile shows us volume at price, which is different from what you might be used to with looking at the volume bars at the bottom of a chart. And in this case, we see where the most volume is at different price levels, which helps us with a lot of things, but it really helps us determine where our strong levels will be on a chart. And there's a couple terms we need to talk about. So the first one is going to be with what is typically called a session volume profile. And we want to talk about our value areas and the POC. So if I flip over to the chart here, and just for now, actually, you know what, and this is TradingView, and I'll do a quick example of this in Thinkorswim as well as Trade to help you out. But if you go up to indicators, and these are only on the paid for version of TradingView, unfortunately. There is a free one called Volume Profile, but it's not quite as nice as the paid for ones. But if you go to periodic volume profile, this will make a volume profile appear on the left side here, and what we want to immediately do is I'm going to configure it for 1 day, and I'm going to set my row size to 300, and I'm going to show the value area high and the value area low. And so you can see that added some lines on my chart. And so basically this red line here, and actually just my personal preference, I typically use this as orange. So this orange line here now is actually called the POC, or the point of control. And this is the area on the chart where the most volume was conducted for the session being measured. So you saw in my settings, I set this to the 1 day period. Now, if we were looking at different time frames I'll talk about in a second, we can actually change those settings. But so we know that for this day, the session, the trading day today, that the most volume was conducted right here at this level. And one thing that's very interesting about the POC is not only can it act as support and resistance, and it will fluctuate throughout the day, and that does allow for different setups throughout the day. So not only will it act as support and resistance throughout the day as price comes up and hits it, because that's where you can guarantee a large amount of volume is going to come into play, but oftentimes it also acts as a magnet. You can see throughout the day here, I mean, the POC did fluctuate up and down as volume developed, and it did move up and down slightly, but we kept just, once we broke away from it, we pulled back to it, and that's actually very common with the POC. And there's a strategy called a POC flip, where your point of control, so say it's moving up all day, and then you start consolidating, and the point of control flips up. Well, then you can actually watch price, and if you see price start to break down from there, then you start to ask yourself, okay, why is so much volume being conducted here? And one of those reasons might actually be because people that had longs the entire day are now closing those and switching to shorts. And sure enough, if you see price start to drop from a POC flip to the top, it's a great time to get into shorts. And the same applies to, or I should say, buying puts. I'm actually looking at SPY here rather than ES or NQ, but volume profile works on any instrument. Does not matter if it's crypto, futures, stocks, whatever it might be, Forex, it works on all of them. It's a great tool for it. And so that's one way to use the POC. Like I said, it can also be support resistance. And then these blue lines I turned on are actually our value area. And so this is where 70% of the volume was conducted throughout the day. And you can actually change that. I've seen people change the volume area to 68%, which would be a standard deviation. In my opinion, I just typically leave it to 70. And once again, these lines will also act as support and resistance. You can see where, you know, this value area that we were trading within the entire day. Near the end of the day, a lot of this volume had been filled out. And look at this, you could have taken a long or bought a call off the bottom of the value area and then immediately exit it and taken a short, or bought a put at the top of the value area, and you have that extra confirmation. If you watch the other volume price analysis parts in the series, you would see, okay, we're starting to wick out here based on our volume, which I have real small down here, so it's not so easy to see, but based on the wicks and the volume, we were seeing that this is actually acting as a level hold. And then the same thing applies if you break above that value area. Oftentimes you can take a break and then a retest and then a push above. So those are so that's what your value area and your POC. And I just want to zoom out real quick and show you something really cool you can do with these. So you can see, since I have it, I'm on the 30-minute now. As you guys might already know if you watched my last videos, I like to trade typically on the 3-minute, but I set my levels on higher time frames. And I do check higher time frames and lower time frames throughout the day, but I prefer most of my trading takes place on the 30-minute. And by looking at the value area, you can see it progressing each day. This is a sign, okay, the value area is shifting up every day. That's the sign of a good uptrend, a healthy uptrend. You can see shifting down. It just helps you visualize the downtrend. But also what's really powerful about this is we can actually go in, and I'll start with the day before and not today, and I'll mark value area low, I'll mark value area high, I'll mark the day before's PLC, and then let me go down here since there was a lot of action happening here. I'll mark this day's value area high, this day value area low, this day POC. I'll do the same thing. This guy, we can do the same thing with the POC here, and we might as well mark the value area low. And I just want to show you a really cool example that you can use with this stuff. So if you mark those out, and then also the nice thing about the volume profile, the entire day is marked in you can see like a shaded area that shows you all the price action happened in the day. And the 30 minutes great for this, for being able to see multiple days. But you can actually easily mark the high and the low of the previous session, because oftentimes if you mark those areas, there are times where we see the following day we see the previous day's high or low act as an area of support or resistance. Now that I've marked those, I'll just hide this for a second, and if we drop down to the 3-minute, now it does take a little bit of aligning, but I mean, look at this. You can actually see, remember, this wasn't today's levels, value area high, low, and POC that I marked. This was the day prior's, and you can see in the pre-market, we started to go up and we rejected, and this was a pre-market level that you could have had in on SPY. But when we rejected and we tried to push higher, we reject off of the previous day's value area low. And then once we break that, we use the previous day's value area low as support and move higher. And then we'd actually do it twice. We double bottom on the previous day's value area low, and then we make a big move. And where do we reject? The previous day's value area high. And you can see we actually rejected there 1, 2, 3, 4 times. Each time could have been a scalp. This one might have resulted in like a break even, or, well, not really, because it's not like, you know, depending on where your stop is, you could have gotten out and then gotten back in, or you could have just held through it, but you could have at least captured 3 really solid tries off the day's prior value area high. And that's what's amazing about this, is that these can act as levels. I mean, you can see it doing the same thing here. You mark the day before the value area high, low, and POC, and you automatically get pre-built levels. And then, you know, as price unfolds throughout the day, sometimes they're not exactly where they should be, and there's nothing wrong with having to adjust them slightly so they line up with the price action better and make it easier to visualize. And they're also not going to account for every level, and that's where other things I'm about to show you come into play. But also, you know, your gamma levels and things like that we've talked about before, which are also strong levels. But these are 3 very strong levels that you can easily throw on your chart every day by just looking at volume profile and marking the value area low, the POC, and the value area high. So I actually put that in the wrong place there. So now moving on from there, if we go into the higher time frame analysis, so I sort of showed a little bit of this. Now, when we're adjusting that, I set it to the daily, but let's say you're on the daily chart and you want to be able to, you can see when I go to the daily chart, I can no longer, I mean, I can still see the lines and I could still technically use these levels, but it's not as useful. So what you can do, and this is actually what I do every morning when I'm prepping my levels and getting an idea of forming my opening thesis, you can set this to week, and then now I have the volume profile for the week. So I have the weekly value area high, the POC, and the value area low, and then on top of that I can also form my levels based off of candles where they align. And now a lot of this, like just by marking these, you'll actually cover a lot of levels using the weekly volume profile on the daily chart. So I mean, you can see here, like this is already covering this strong support down here, and this is already covering areas that are going to become very useful to us, which is nice. But and then you can also plot out your ledges. So in this case, like volume dropping off here on the weekly volume profile, this will likely act as a level, and we can do the same right here with, and by ledges, and I'll get into it more, but and I should probably stop plotting these now in this case, but where volume is very high, where you have a high volume area and it drops off to a low volume area, I typically call those ledges, and their technical name is high volume nodes, low volume nodes. We'll get into that shortly. But let me remove those drawings, and I want to show you if I go to the weekly chart, so I go to a higher time frame and change it to a month. Now once again, each candle represents 1 week, and we have the volume profile, value area high, POC, value area low for each month. And once again, we can plot very strong levels using this. It's just super powerful, and it makes inspecting higher time frames extremely useful. And so when I'm looking at the weekly chart, I like to change my volume profile to 1 month. When I'm looking at the daily chart, I change it to 1 week. When I'm looking at anything less, so 4 hour or less, then, and actually on the 4 hour you can leave it weekly too. So let's say 2 hour or less, then at that point I change it to 1 day. And that really helps with doing your analysis and plotting levels each day. So always make sure you plot levels on higher time frames. And then as I started to get into, I want to talk about the high and low volume nodes, and you can kind of see in the background on this how that lines up. But let me flip back over to the chart here, and let's drop down to the 5 minute. And so at this point, I'm actually going to hide these just so it's cleaner, just to make this more apparent. And what I'm looking for is, so these parts of the volume profile that stick out are called high volume nodes, and then the parts where they drop back down are low volume nodes. And that just means when price is in this area, there's been a lot of volume coming in. And what that typically means is, to generate this kind of volume, this takes millions of dollars to do. And so those levels, those areas that a lot of this volume's coming in will typically be defended. And so if price is dropping into a high volume node area, it will typically be defended, and whoever had initially printed that volume, invested their money, will try to defend that level and push it back up. So you can use that to your advantage by finding areas where it transitions from high volume to low volume and marking those levels. So we have an area right here that I can mark. We have an area right here where we have a drop off that I can mark. We start to see it again right here, and again right here. And you can basically go through this and go as far back as you want, or as I mentioned previously, if we jump over to the daily chart and we flip this to the weekly volume profile, I can start plotting high and low volume nodes there. So you can see right here we certainly have a level. Right around here will most likely be a level, and right here we have a level. And So you can keep going through that, and you can mark a lot of levels, and you can go back as far as you want. And even if you don't use those levels for weeks or months, if you leave them on your chart, there's always a chance at some point in time they'll come back into play. So it's just kind of nice to leave them. Here we have another drop off, so mark that. This will likely, 419.06 will likely be a level in the near future. And honestly, it's so close to 419, it's probably going to end up being a small gamma level, if I had to guess. But that's the power of using these high volume nodes and low volume nodes, is when the volume transitions, when it drops off, it helps you easily spot those levels along with price action. And you can see I plotted these on the daily, and sure enough, like this one right here, it was top of resistance for the day, and I found that with the volume profile. So and once you zoom into a lower time frame, it's always a good idea to sort of adjust them to make sure that they do line up properly, sort of double check them if you can. But I've done it blind before, especially if I was in a hurry, and they always work perfectly, even especially on the higher time frames. So those are the high and low volume nodes. Now this is actually a really cool tool that a lot of people don't know about, and it's the fixed range volume profile. And I'm pretty sure most brokers have this. I don't know if Thinkorswim has this. TradingView has it, Trade8 has it, NinjaTrader has it. I can speak to those. I'm not sure about Thinkorswim, but for a second, let me hide this again. And let's go back to the 30-minute. I love operating on the 30-minute when I'm doing volume profile. And now there's different areas that, if we saw a lot of price action or we saw a big move, we might just want to see what was going on with volume in those areas. We might want to see, okay, where did big money inject most of the volume? Where do they buy the most positions or sell the most positions? And the reason we want to know this is because if price drops back to that level, we should take that play. So again, that goes with them defending areas where they've invested a lot of money. Now I'm going to click over here in TradingView, fixed range volume profile, and Trade8 is just called volume profile, and I will show that briefly at the end of this video. And I just want to cover this whole trend area, so you can draw that. As long as you're covering that area, you can see. Now we're just showing the volume profile for this uptrend, and you can see, and this is common of an uptrend, and this is actually a particular pattern with volume profile that I'll get into shortly, but you can see there was a bunch of volume injected around here that pushed us up, and then this area, this is the POC for the area where a ton of volume was injected. You can see we consolidated for quite a while before pushing higher, and then we even have some consolidation right here. And so what I like to do now, so price is above these areas at the moment, so I want to take longs if we come back and retest these areas. So one thing I really like to do on my charts is I'll go in and mark it right where the high volume node drops to a low volume node, and actually I'll move that up a little bit just to kind of be in line with price action here, and I'll change this to a green. And this tells me, because I'm going to remove this volume profile later, and this tells me, okay, if we drop back down here when I'm watching the 3-minute and all of a sudden we come up to this green line, that I'm going to get ready to take a long. I'm going to use volume price analysis to look for wicks and look for volume at time to tell me if we're holding this level. And there's often times where when you come back to these levels that you plotted on a higher time frame like this, where a lot of volume came in, that like the second that it touches it, the thing just flies up. It's so common, it's unreal, and it's one of my favorite setups with volume price analysis. And one thing that's really cool too, I mean, and you can even mark this previous POC as well, but chances are they'll defend it initially up here, and then if it does break in, like this would actually more of so act as like a zone. This zone right here, you can expect volume coming in to defend this level. And then say if we broke below it because it's such a strong level, and we got to this area where they're likely to defend again, and say we take along here because we see them defending it, and we go up, well now, instead of just getting rid of these lines, what I like to do is I actually like to mark them as red, and I know they're resistant. So if we defend this area and we start to move up, I'll just take profits here. And if it looks like this is holding as resistance, I'll even switch to shorts or buying puts. So you know, I buy calls here, buy puts here. That's assuming that we've retested this, it moved up, retested again, moved up a little less, retested again, moved up less, broke through, came down here, and then sure enough, we move up. I'm going to take profits here. And then they might keep retesting it and breaking it again. And if that happens, then it becomes resistance. And it's the same thing when you're plotting using fixed range volume profile to plot levels above the price action too. It's just that's where you want to buy puts or take shorts. And one thing that's nice is you always want to look for areas where there was a strong reaction when you're using fixed range volume profile. So like we can measure the volume in this area just to see, you know, so like right here, and this kind of demonstrates it perfectly. So if we had marked this the day before and we see, okay, right here is where a lot of the volume was, and this was green. Well, sure enough, the following day, when it came down and touched it, we get this strong reaction, and then you get out, and then eventually it can break through it. It certainly can break through it. But I do like, it usually takes a couple tries before it does break through an area if it's strong enough. This is not the strongest area by any means, but another place you want to put that in a lot of times is areas of consolidation. Not always, but you know, you may want to see like where the most volume was conducted in a certain area. This isn't a good example because this is just like one big chop day, but when you see areas of like strong, where you had strong reactions that moved price one way or another, that is typically going to be my favorite areas to use the fixed range volume profile and then derive levels from that. So that way, if we come back to those levels, we can play them accordingly. And so moving on from fixed range volume profile, I want to talk about the patterns in volume profile that are always going to be very common. So this is called the P pattern. Now you can see here what was happening is we had a strong uptrend. Every area that the volume profile stood out. This is where volume got injected. We got a big move up, kind of starts slowing down, seeing some resistance, and then volume gets injected again and we move up. Same sort of thing, we run out of steam, more volume gets injected and we move up. And you just saw in the other example how I was drawing lines at these areas where volume was injected. And then finally what happens, we had a strong uptrend and we start topping out and we form our P pattern. And now what you can do is you can play a strong break out of the top of this with a retest. So you never just want to play the break, but we have a strong break with a retest that holds and moves higher. That's one way to play a P pattern. It's usually a bullish pattern. It's usually going to be a continuation. But if we do break down, come back and retest and start falling, you can certainly play that as well. And then lastly, every area where we had a strong injection of volume, if we do start falling below, you can play the holds on those high volume nodes as well, or where we shift from a low volume area to a high volume area. You can play those holds using the other techniques in volume price analysis we discussed. So that's pattern number one, the capital P pattern. It's considered a bullish pattern. Then we have the bearish pattern, which is the lowercase b, and it's just exactly what we saw, but in reverse, where you have your trend start, and then as we're moving down, we get an injection of selling volume to push us down, injection of selling volume pushing us down, and then boom, we get down to the bottom of the B. And it's the same thing. We have this massive area of consolidation where you can either play a break and retest of that consolidation zone. And then there's another pattern I'm going to talk about. And you can also, anytime you get these high volume areas where we have a lot of consolidation, those, you know, we're in a ranging pattern at that point rather than a trending pattern. And there are ways to take trades on that as well, and those are usually scalps, and I'll talk about that some when we get into it. But this is the bearish trending pattern that you see very often with volume profile. And then this is the D pattern, and this is when we consolidate. So when we're consolidating for long periods of time, you just get a big blob of high volume nodes, and you get your POC typically right smack in the middle where the most volume was conducted. And one common way of playing this is, even though it's like we have a ton of high volume, when we get to the outer rims of that high volume, and you start to see it wicks forming, like it's going to go back into the high volume because it's going to hold on the low volume nodes. It's not going to find the volume it needs to break out of that consolidation. You can actually play that range, and you have two options there. If you're a safer trader, you're not as aggressive, what you can do is you can, when you see it start to hold the edges of the D, then you can take a longer short accordingly, and then when it gets to the POC, you can exit out. So that's one way to play it. You can do that going long or short, buying calls or puts, and you can always exit right at the POC because it is going to always struggle at the POC. When you start using volume profile, you always see it struggling at the POC. You always see it acting as a level. The other way you can play it is the other way, is when you get to the POC, and like you can see right here, it starts to hold the POC, you can take a trade and play it up. Now that's a bit riskier because in my opinion, we're right in the middle of all this high volume, so anything can happen. I really don't recommend doing this, but you certainly can. Or if you're also an aggressive trader and you want to try to maximize profits, when we get to the top side of it, instead of exiting at the POC, you could try to exit at the bottom. But there's always a good chance that when we get to the POC, it bounces back up, and then you just end up breaking even, and you know, you don't get to capture any profits. So the way I always choose to play D patterns when we're in range day consolidations, I wait for us to come to the edges of the volume, I take a long or a short, and then exit at the POC as my profit target. And then our last pattern is a strong trend pattern, which is the capital B pattern. And just think of this as two D patterns basically, where we had consolidation, a really strong move, and then consolidation. And now what's nice about these, and I think we actually saw one on the chart, we have one here where, let me turn this back on, and let me set this to day. Yeah, I mean, you can sort of, and remember, these aren't always perfect, but these are the general gist. But you can see, and this is what tends to happen with these B patterns, where you get these high volume node, low volume node, high volume node, low volume node. And actually, there's a high volume node right here, some consolidation right here. So this is kind of like a B with 3 parts, but anyway, you get the idea, hopefully. But whenever you have these moves, it's always interesting because when we get to the bottom consolidation, there's always a chance that we break back up and we just move right through all that low volume area with almost no resistance whatsoever. And you can see that's actually what happened this day. We broke down, formed a B pattern on the volume profile, and then just ripped right back up to where we started. And that is very common with these B patterns because it indicates a strong move in one direction or the other. And typically the reason that happens is because of some sort of macroeconomic news. That's usually why we see that sort of pattern. Now, and that means that, you know, it's something outside of like the standard hedging and fundamental stuff that takes place that moves markets normally. That typically means that something abnormal moved them. Not always the case, but that's just been in my experience with using volume profiles. So that covers most of what I want to talk about. There are different types of volume profile. The one I was using here is a new one. It's really awesome, the periodic volume profile, which lets you change the sessions you're concerned with. Also, a very common one I see people using, and I use myself, is the visible range volume profile. I usually go in again and adjust the row size to 300. But what's really nice about the visible range volume profile is it just shows, it's exactly what it says. It's the visible range. So whatever price action is on your screen, that's what it's showing over here. So if you zoom way in, you're just going to see exactly the volume profile for that area. And then if you're going to zoom out, you're going to get more data. And you zoom out and you show the whole day, then basically you're seeing the same thing as what you have with your session or periodic volume profile. Now, if you use Thinkorswim, there's been quite a few people that have asked me about this, so I just wanted to touch on it. You can use volume profile. If you go, and you can use it in a very similar way. If you go up here to your studies and you search volume profile, you'll see it here. And if you click that and you want to get it displayed like this, which I highly recommend doing, you go into settings, and price per row height mode, set it to tick size, leave this as is. Now this is where you can get into setting it day, week, month, hour, whatever you want to set it to, you can right here, which is very useful. Again, lower time frames I keep it to day, higher time frames I do week or month. I don't use a multiplier. Now here's the important part. On expansion, you must set this to no. If you leave this as yes, you can see it just moves everything to the right over here, which isn't, that's kind of like that visible range profile. But if you're doing that, then you want to set it to chart and leave it as is so it shows what's on your chart. And then you could actually just add another study here, right? So we just add a second volume profile. And then this one, we can set it to tick size. We can set this one to day. On expansion, no. Show point of control, yes. Show value area, yes. Value area percent is 70. Apply that, and then boom, you have your same thing. So you have your visible range basically, and you have your day volume profile, which that's the best way I've figured out how to do it within Thinkorswim. I don't typically use Thinkorswim, so there might be a better way out there, but I was just trying to do it for people that view my videos that do use Thinkorswim. And then lastly, if you're using Tradivate, then the way you would set that is under indicators. You go to so actually you need to go into add-ons first, and if you go into your add-ons, you can install the free indicators, and then once you've installed the free indicators, you can go under free indicators and say add volume profiles. That's going to add this to your screen, and it's the same deal where you can set the session. So for futures, you can do 6 p.m. to 5 p.m., or you can do just the overnight session, the day session only, and then of course weekly or monthly, and then your value area percent, which I just realized it had set to 75 for some reason. I actually prefer to keep that 70 since that's the standard. And it's the same deal. If I zoom out here, you can see that I have the volume profile set to daily right now, so I can use it the same exact way that I've been demoing in this video. So I think we can leave it at that. I hope that this was very helpful for you guys, and if you have any questions, feel free to leave a comment, and thanks for the support, everyone.